Hey everybody, hope this finds you doing well. We're going to go ahead and jump right into it. We have a very important story that we want to cover as well as a couple of other stories. Last week was a doozy when it comes to the headlines. As you can see, Bitcoin for the month of July ended the month with a green candle, which is a positive. We'll see what happens over the next several months. Many people believe if we go according to the 4-year cycle, we've talked about this many times in the past, we still potentially could have some downside, particularly as we head towards September, October, and maybe at the end of the year and going into the beginning of next year, we could potentially start seeing a bounce moving towards the upside and maybe try to get back to all-time highs eventually. Obviously, we don't know when that's going to happen, but we'll keep you posted there. What is the most important that we need to get to today is what happened last week. We found out the end of Thursday going into Friday that tens of millions of dollars of Bitcoin was stolen due to a cold card wallet flaw. Now, cold card is one of several popular devices that are offline cold wallets for Bitcoin. So a lot of old school Bitcoiners, they only use Bitcoin being offline, not having to KYC, which is know your customer, not having their funds on a platform like a Robinhood or a Coinbase or any other platform that holds crypto assets, back PayPal, etc. Because the risk is that you have a third party that is going to be holding and custodying your Bitcoin. And if they were exploited in some way, shape, or form as a third party, then you could potentially lose your Bitcoin. So people take it into their own hands and use a cold wallet. We know that also there is security vulnerabilities in trusting yourself, not only to make sure that you do what is necessary to keep your Bitcoin secure, but then you're still going to have issues because you are dealing with these devices, which once again, you're dealing with a third party, a counterparty. In this case, it's CoinKite who produces this cold card product. And you can see that CoinKite on Thursday admitted that its Cold Card MK3 model, which was an older model, was affected following the hack and advised users to move their funds. And they also say that their other devices from MK4 all the way up to Q should also take precautions. And there is a site here. You can go to the blog, CoinKite's blog.coinkite.com, excuse me. And you can learn a little bit more about their security advisory details and make sure you stay up to date on what you should do. A lot of people who have cold cards have been moving their Bitcoin to these other third parties and platforms that I mentioned, at least to be on the so-called safe side until they figure out another way to put their funds into another device or another way to secure their Bitcoin. And so when we go back here, we know that at least a total of over 1,000 Bitcoin have disappeared from several wallets. And while CoinKite has not admitted that the hack is linked to their wallets, the company has said that a wallet seed generation bug in the cold card products meant the hardware's true random number generator wasn't actually being used on certain firmware versions. So when you have a cold card or when you have a cold wallet, it produces a randomized seed phrase, which are basically a set of words that are basically like passwords. So in order to have access to your cryptocurrency on whatever device, cold wallet device you have, if for whatever reason you actually lose the physical device, then you still have those keys to be able to recover your Bitcoin using another device. Now, these words are randomized, but there's a particular seed generation, and you want to have a company that is making sure that it's using a totally random number generator that's going to be randomized to a certain degree to where there's not a hacker that could come in and over time be able to figure out how to come up with these randomized words, whether it's 12 words or 24 words, and be able to hack people's wallets. And unfortunately, this particular bug did not have and use the best true randomized number generator. And so it used some older versions of coming up with these words or seed phrases, I should say. And so that became vulnerable. And you can see this was a post from last week that the attacker had moved BTC around. And of course, people are going to be able to track what's happening there with this address. So hopefully in some way, shape, or form, some of these people who lost their Bitcoin will be able to get some type of recovery Who knows if that's going to be able to be happened, if CoinKite is going to offer some compensation in some way, shape, or form. Obviously, there's a lot, and this is going to develop over time. But at the end of the day, particularly whether or not you had a cold card or had any other type of cold wallet, make sure that you understand their security practices and your own best practices. And if you're undecided, maybe it's best to try to move your cryptocurrency until you can figure out a way to safely secure your cryptocurrency. Obviously, these things are happening with Bitcoin trading at around $60,000. We can only imagine what will happen and the amount of attackers that will be coming for your Bitcoin when Bitcoin gets to back to 100,000, gets to 500,000, and let alone if it was able to get to $1 million or more. So you want to make sure you take the most secure path forward as possible. Of course, people are also considering and have been buying into the Bitcoin ETFs. Now, obviously, there's still some risk there because, once again, you're dealing with a third party like BlackRock, but they have custodians like Coinbase who, for one, have insurance. So if something were to happen to that Bitcoin, it's insured. So most likely you have a better chance of being able to get compensated for that lost or stolen Bitcoin. But a lot of people do not trust themselves to do all of the technicalities when it comes to trying to secure your Bitcoin. So they prefer to have a company like BlackRock or Fidelity to hold and have their Bitcoin for them. That's the same with just your money, period. Would you rather have your money sitting under your mattress at home, or would you rather have whatever bank hold your funds and custody your funds? Because obviously there's insurance in the United States as well as around the world, and different ways to be able to recoup if there were some type of exploits or hacks when it comes to your funds. But also there's limits to that as well. So there's a lot that we continue to learn as we learn about Bitcoin security, crypto security, as well as just general security best practices when it comes to crypto. So one thing that we try to do is that we make sure that we're diversified, not only just having all of our Bitcoin in a cold wallet, but there's also ways, as we mentioned, you can have some exposure through the ETFs. You can have exposure by having some of your crypto on a platform like River, for example, or Swan, or some of these other Bitcoin only storage and security platforms and custodians. Also, people have put their funds and left their funds on Coinbase. Like I said, some of these platforms do have insurance. So if something were to happen to your crypto or to your Bitcoin, then you may be able to get some type of compensation, maybe not 100%. So keep that in mind as well. So this is just a call to action with regards to making sure that you do your due diligence and have an understanding of what is going on, where you have your Bitcoin, and what are some of the options that you have when it comes to making sure that you keep that Bitcoin as secure as possible. Now we'll go ahead and move on to the next story. Emirates, which is one of the top airlines out of the UAE, they just made a change to the way that young people are able to pay for flights. And it's not just for young people, but they were influenced by their younger travelers to go ahead and allow for cryptocurrencies to be used to pay for flights. So that you can see here, the Dubai-based carrier Emirates Airlines is expanding its payment options. So if you have a crypto.com account, you can choose what is called a crypto.com pay on the Emirates website, and that way you'll be able to use the cryptocurrencies that you hold on on crypto.com to pay for these flights. And I believe on the back end, Emirates will immediately have that cryptocurrency transferred into their currency and then be able to move on from there. Maybe they take a percentage and keep it in crypto, who knows? But at the end of the day, it gives you an option on being able to pay with cryptocurrency. So this is just going to show that despite being in a major bear market that we're in, is that we're still seeing all of these developments that are happening and coming across these different vendors that are opening up the ability to be able to pay with cryptocurrency. We know using PayPal, we know using Cash App, and some of these other platforms, you can pay for certain things. Vendors are able to connect directly with their customers who want to pay with Bitcoin and other cryptocurrencies. So we're still seeing that process being laid out. And of course, Emirates is just another one of the major vendors that are open to accepting cryptocurrency. One of the last things that we'll just jump into real quick, this comes to when it relates to the stock market and equities side of things. Of course, we talk about Bitcoin and cryptocurrency, but we also generally want to talk and are interested in emerging markets, particularly when it comes to artificial intelligence. And Leopold Aschenbrenner, who is this young guy in his 20s, had a hedge fund that went from $225 million seed funding and took it all the way up to $45 billion. The lesson is that he took out leverage, which basically means he took out, borrowed money to amplify his gains, and it ended to about $45 billion is what that fund ended up growing to. But unfortunately, he ended up having to sell most of his public holdings to Citadel. You can see here that the hedge fund, which is called Situational Awareness, and he has a paper here called Situational Awareness, and it was written in and released in June 2024, and he basically talks about, and he has been very right when it comes to what is happening with artificial intelligence and how we're moving closer and closer to AGI, which is artificial general intelligence. Basically means that that's to the point when AI becomes just as smart and soon to be smarter than the human. And so we're getting closer and closer to that, faster and faster. And it talks about the needs of compute to be able to get to this AGI level. Also, what the dangers could be when it comes to AGI and how sovereign nations and governments will potentially and should be involved in what's happening and have an understanding of what's going on with AGI. So it's a pretty interesting read. It's very long. I didn't read a lot of it, but I did get some summaries. And here it is, and it's situational-awareness.ai to learn a little bit more about his take on artificial intelligence and the direction that it's going. But going back to the major news story that blew up last week is because of the fact that he had leverage reported up to 400%, the manager was forced to sell off a lot of his leveraged public stock bets. And he had a lot of names that did incredibly well over the past year and a half, including SK Hynix, which just moved onto the public markets, Micron, SanDisk, Nebius, which is a data center play. He has a lot of data center plays, actually, like Applied Digital, CoreWeave. He also had energy plays as well that had done very, very well. And because over the past week, the tech sector, particularly a lot of AI names, hardware names, compute names, data center names, had a fall off, particularly in the month of July, and a lot of that culminated last week, particularly as we headed into the FOMC meeting. Citadel came out with a report saying that there was a potential rate hike. That also kind of scared the markets. We did not have a rate hike, but once that happened, it started to roll over on this particular fund. And when you're leveraged this much, if you start to go down 25-30%, then you really are at risk of being what they call margin called. And that means that you have to return and cover all of the leverage, all of the money that you borrowed. You have to pay all of that back. And so in order to be able to do that, he had to sell his fund. Citadel swooped in. Many people may remember Citadel from the Robinhood GameStop days, but they swept in and bought a majority of the fund. Apparently, Leopold did send a letter out to investors. They do still have some public holdings, as well as their private stakes in Anthropic. They have a huge stake in Anthropic. I believe it's somewhere around $5 to $10 billion stake in Anthropic. They got in very early, under $100 billion valuation at the time. Right now, people are looking at Anthropic potentially opening the public markets closer to $1 trillion. So you can do the math there. So he has been directionally right in terms of a lot of the public stocks and equities that he got into. But at the end of the day, he doesn't have, as you can see here, much experience running money. And so a lot of critics, had issues with, what he was doing with regards to risk management. And so we also found out, which is kind of crazy, that he did have a connection with FTX. He worked with their nonprofit arm called Founders Fund. He also worked at OpenAI before he started this situational awareness fund. So that was one of the biggest news stories over the past week in the equity markets, particularly when it relates to AI. So you can read a little bit more here on CNBC, as well as other outlets that kind of break it down in terms of what actually happened with this $45 billion billion hedge fund that is no more. But he's young. Obviously, he has a lot of time left, hopefully, and we'll get a chance to potentially learn this lesson. And all of us can learn. We don't have to always learn it the hard way. We can sometimes learn from other people's mistakes. Leverage is always something that is particularly dangerous, especially if you don't know what you're doing, and you could lose pretty much everything if you use leverage the wrong way. So just let that be a lesson to us all. And once again, make sure that you check on what's happening with your crypto. Hope all is well on your end. Have a great start to your week, and we'll be in touch soon. We look forward to linking up with you on the network chain. Take care. Bye-bye.